Well, that escalated quickly and then somehow calmed down. Hey everyone, it's Tuesday morning, March 3rd, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. So, after a pretty rough start to the week, US stocks actually recovered by late morning yesterday and ended mostly higher. Investors were digesting the fallout from US and Israeli attacks on Iran, plus the counterattacks that followed. Geopolitics was clearly front and center. The Standard & Poor's 500 finished little changed after bouncing back from earlier losses. The Nasdaq Composite gained about 0.3%, helped by a rebound in tech. Meanwhile, the Dow Jones Industrial Average slipped 0.2%, but that was still an improvement from much steeper losses earlier in the session. Now, oil. That's where things really got interesting. Brent crude surged about 9%, hovering near $78 a barrel. West Texas Intermediate traded just below $72. Iran is the fourth largest producer in OPEC, and markets are worried about potential disruptions in the Strait of Hormuz, where tanker traffic has basically stalled. And of course, higher oil means renewed inflation fears. Energy stocks like Exxon moved higher, and defense names such as Lockheed Martin also saw strong demand. On the flip side, travel stocks struggled with Delta Airlines under pressure. Gold briefly touched around $5,400 an ounce before pulling back, while Treasury yields moved higher as traders dialed back expectations for interest rate cuts. Looking ahead, the next big data point comes today, the monthly jobs report. Economists expect the U.S. economy to have added around 60,000 jobs in February, down from January's 130,000. So that number could really shape rate expectations. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.